Alright guys, welcome to the mentor session. Sorry, I didn't get my screen to come up properly just there, but we're in business. As I said, I'm going to answer a question that was put to me last week. Someone messaged me direct on the chat, so feel free to, if there's questions you have, drop them to me, send me an email, however you wish to do it. But I was asked about someone who's relatively new, what would be my process for your sort of morning preparation. What are you looking at to prepare yourself in the morning? We just starting to see a little bit of movement going on in bonds and in equity markets. So yeah, the question was around what's your sort of normal morning process? What are you looking for to happen? And how do you go about doing it? So creating a bit of a checklist. I think this is really important. Otherwise, you run into a very simplistic routine of, well, you often hear people who say, oh, well, I come in at this time of day, I check my charts, and then I start trading from this time. Well, turning up at a certain time and checking charts doesn't give you a trade. All that does is it gives you a format of doing something, which I can just look at a chart and say, I've checked it. Have I thought about where any trade opportunities are, how the day could play out, what's significant going on, what news matters? No, all you've done is you just looked at a chart and turned up at the right time. So let's go and have a look and try and address this. What you need to try and create is a replicable process so that every morning you look at things in the same way. You take trades on in the same way and take your preparation on in the same way. So you're looking at consistent questions to ask yourself, and it's all about asking questions and asking questions consistently to make sure that you're not missing things. Because if you're not making sure that you sort of go through your checklist of relevant questions, you can miss stuff, because you'll end up in a situation where what's going to happen is you take a very quick look, you see the first thing that comes to mind and you think, yeah, that will do, I like that as a trade idea, I'm going for that, rather than making sure that you have considered all of the different permutations. So the point being here that it allows you to compare previous situations. It allows you to prepare with purpose so that you can go into a day thinking, right, I know what strategies might be important today. I know what I'm potentially looking for on the day. Points where the market could tip, points where a move of a certain direction is now more likely. So it maps your day out there. That's what you're trying to get towards in terms of what timings you're looking at. And I don't mean, oh, at 10 o'clock I'm going to sell or anything like that. But what I mean by it is having an idea of if we've got a lot of space to fill in, could we spend time doing that and then move later? Is the move likely to come later or earlier in the day? What type of strategies do you need to use to play any of these moves? Now, the first thing I'm going to come on to here is news and how do you address this, because you can't illustrate this with a chart. And this comes down to scenario planning. So in the morning, make sure you're reading the news. Now, again, there needs to be a purpose to reading news. It's not just read some headlines and, read something, oh, that's interesting. Read something else, that's interesting. You need to be looking at that and asking yourself, where's the trade in this? Does the market believe in it as well? So you have two types of news. You either have a type of news that has created a move. So news in an overnight session that creates movement, giving you gaps the next day. We've seen loads of that in March. When you're seeing that, you have to ask yourself about, is that piece of news now likely to create continuation? Or has that now been factored in? And what are the correlations looking like? How have other markets reacted? So let's say you're trading S&P. Has the news solely moved the S&P? Or has it started to move other markets? If it's solely moved the S&P, then you know that's the only market to be interested in on further developments of this story. You also know that unless you get further developments, S&P might get dragged back in line with other markets. The other part that you need to be thinking about is, could this story be denied? Could you get a counter move to the story where you have some kind of commentary to, these are stories where it's a suggestion, it's a source's comment, it's a potential. And what you need to be thinking about is, what's the scenario of this then getting denied or pulled back on? Perhaps a better way of putting it, that people go, actually, no, this could not happen for this reason and this reason and this reason. This is something that we're still ongoing battling with this ECJ, ECB constitutional court scenario. When it is a developing story, you now need to start narrative planning this forward. What are your next steps of this story? With the ECJ, ECB constitutional court scenario, well, one of the biggest questions is going to be around how the ECB goes about buying German bonds. And if they can't find a solution to this, bonds are not likely to be getting bought anytime soon. So we could end up suddenly with this enormous lack of demand for bonds. And that demand now from the ECB having to go to other places. So benefit to places like Italy, France, places like that. So that's something you need to consider. Also, how are markets reacting to this story? So if you've seen a story and markets just haven't really reacted and not done anything with this story, well, that's telling you something. That's telling you that this isn't getting the traction it should, if you believe it should. And so therefore changes the way you might approach any development of the story as well. That if markets don't react initially, the next reaction you can then expect to perhaps be slightly more muted. Typically, a story will develop where the first reaction is the biggest and it progresses from there. And then from that point, if you're not seeing a great deal of reaction, and so these are all sort of questions you need to sort of have an element of a scenario for. What development of the story could create a change in reaction, could create a new narrative? That's the other side of it that you're really then looking for. So think through your second, third order consequences, that if we do get a reaction, so let's take for this Eurobond idea. This seems to be the way we're going forward, that we're going to get a Eurobond that's created as a joint borrowing from all European countries. One big question that's going to come up here is, can the ECB buy this as part of their PEPP? If so, then this now creates a next order consequence, that if the ECB can buy the Eurobond, are we going to see that then start to dilute the capital key further, and you'll see further selling of bonds, potentially even further then a start of selling BTPs as well. So think through consequences as well. That enables you to develop your next scenarios. Now, when it comes down to your technical approach, the way I start off, and this is something I did a little while ago for someone, but it still remains the case. So you'll see some of the levels are not quite where we are right now. But the point is, it's a consistent approach. It's not about where we currently are. So I'd always start off with a daily chart and looking then at yesterday's candle. Have we got a bullish? Have we got a bearish candle? That giving you your first steps. Now, often there'll be a scenario where it tells you nothing. You get a candle in the middle of, let's say in the middle of here, that's telling you very, very little on the day. Or sorry, very, very little about yesterday in terms of the bullish or bearish nature. So in the absence of a changing daily candle, I would view the market to still be in the same direction as it currently is. What you also need to be thinking about from your daily perspective is, what are volumes looking like currently? What are ranges looking like currently? And adding that to your perspective from the daily. So if you're seeing volumes falling as you're on a move up with a bearish looking candle, what that's saying to you is this move up is potentially over. ranges are getting smaller as well. And that equally is suggesting to you that people aren't really pushing this move anymore. And so therefore we could be in for a change. What you also need to think about, and I always try and break this down into current trend and general direction. Now what I mean by current trend is the move from the recent low or high. So in this scenario, the trend was down here and then up. The general direction is sideways. We are in a market that overall is not progressing clearly in one direction or another. We've not broken a low and then pulled back to it and gone lower again. Whoops. So therefore we have a generally sideways type direction. You know then that on a break of these lows we have a significant change and the possibility of a greater continuation move. Likewise, a break of this trend and these highs will set that up as well. So you now know from a daily perspective, are we in any significant point? And right here, probably not. We're around about the middle of range. So movements are perhaps going to be slightly more limited and unlikely to turn into gigantic trending type moves. We're not going to tip a point that becomes, groundbreakingly different for the market. Next up, get onto your profile. And if you don't use profile, start using it. Profile gives you a great deal of context. It gives you a great deal of structure to a market. So you start to understand what the day type was yesterday. And that's always your first point. What type of day was it? That's going to tell you who's in control. Now you can see this partly from a daily candle, but if you have a day that is very trend-like, that's showing you that larger participants are in control. You can then start asking yourself about the possibility of continuation and what points you would be looking for to stay above and then break above to continue a move. So here we've had a rather strong day up, followed then by a balancing type day with a rejection. So this now puts in doubt this move up. It's not saying it's over, but it's allowing you the possibility to play more to the downside. Whereas on the back of this day, your view would be more towards the upside. These are objective points here. And something you could look at every day, that you're looking at this previous and thinking, well, what's been going on there? And what are likely scenarios out of this? Well, on the back of a trend, likely we get consolidation as buyers will now come in at higher prices, and that we're unlikely to see a trend. It's not that common to see trend type days. But with this tail, it now opens up the possibility of a drop. So you have to ask yourself as well here, where is direction going to change? Where are things going to become different? So where is this bullish move going to end? Well, you've got previous day's low, you've got this low volume single print here. This for me would be what I call a line in the sand. The point where the idea of this going higher dies. And you don't want to be playing longs once you get through this area. So what that enables you to do is quite quickly structure your day. That you're not looking at numbers of ticks or specific setups. You're looking at a potential for the day. And at this point, as long as we're above here, the market remains bullish. Yet with this, also has an element of downside. So it's more a wait and see day. So when it comes to your timing, this is a day that you want to be waiting to find out if the market can show clear direction. That's the bit you're then interested in. Whereas if you're breaking away from a wider range, this would be a time to think now we can have a more directional, trendy type move to be played. Next up, you're then going to bring this onto your hourly. So your daily and your profile have given you context, giving you structure, giving you potential timing and type of day. Your hourly is going to give you more specific levels, plausible targets, an understanding of the structure of movement. So what we've seen here is a move down, a double bottom, a move higher, consolidation and breakout. This all looks like oil about 2 weeks ago. After a double bottom, we move up, we consolidate for a period, trend up, and then consolidate once more. So this is now telling you quite a lot. This is saying to you that yes, we have got a foundation. We've got a further willingness of buyers to move to higher prices. What you now need to be thinking about from here is what levels are relevant in terms of what's in the realms of probable based on recent ranges, based on clear levels that you can see. So you've got this clear old range. That's giving you around about a target of about 100 ticks. Now, if that's what your current sort of ATR is, then bearing in mind we'd started slightly higher, so that's going to be giving you a target of around about 130. Keeping that in mind then, is this a plausible place for a move to reach for one, and are you likely to then see a bounce from there? Likewise to the upside, what references do you have? So what it enables you to do is maintain scope as to the possibility of movement. So you've answered the question there, does it have a good foundation? That's what you're looking for. When a market just suddenly runs in one direction, you're starting to think this doesn't have a great foundation for a continuation move, whereas this does. We've got a double bottom, we've got a break higher, we've then had consolidation higher, so acceptance of higher prices. We're starting to see the same again, and this is why it's so important to recognize where this can change. If you start falling out the bottom here, the buyers who are later into the move here on this breakout are perhaps not going to want to hang around. Finally, then you're moving on to the point where trades can be entered. So now you're trying to pinpoint entry points. Entry points that would allow the break of certain other levels. So what we've got here, so this is coming into that next day. This was the consolidation day following the trend. And what we've seen here is the majority of this day actually sits within quite a tight range, which you can't really see from a profile, and you certainly can't really see from an hourly chart. But when you bring it down onto a 5 minute, you've now got clear points. 73, 32 are the clear levels where you can get a break, and this can now set you up for a break through that line in the sand that you achieved. So you're looking now for where can trades be entered, where is, in this scenario, the market dynamic potentially going to change? Where can we now start saying to ourselves, we may well have movement from here? We could develop direction either out of this range to break the high, and you can then start to play a directional trade, or out of this range to break the low, and you can start then playing a directional trade. So that's what you're trying to achieve. Every day it's down to going through this same process. When you get onto a 5 minute chart, where can trades be entered? And how, importantly, is that trade likely to play out? Are you going to see acceleration? Because whilst you're in this range here, you're not looking for acceleration. You're looking for a change that would then tell you that we are into a different phase. But as long as you're seeing the market slowing down at these extremes of this little range here, you're seeing the same, which should tell you you don't want to go pushing on any trade here. You want to be staying in that trade and just looking for short-term movements within range. Whereas once you get the acceleration, once you get the directional move through the level, then you can go with it. So if you get the move to the downside here, and it comes in with selling that pushes lower, that pushes delta lower, that has volume in it, now you can think we've got a change. We've seen some of the hallmarks for it already. You've got the potential rejection up here that you saw on the profile. You've had indecision as the market decides, are we going up or are we going down? Break that indecision there below 32, and now the move's on. Now the direction is there, and now you can try and stay in that trade. So that's the kind of thing that you want to be going for. Each stage of this, and watch this back, because I didn't sort of speak every question, but look at those questions and set out your own questions to ask yourself. You want a clear checklist to go through each phase of your trades, each phase of larger time frame, profile, 60 minute, 5 minute, going down from building context and asking whether something can change, to where can the market plausibly go, to where are you going to get in and how do you expect it to trade once you do get in. Hopefully that's answered your question. Hopefully that's helped many other people in terms of their morning preparation as well. On that note, I will wrap it up there. I will catch you all at 4:45 and we'll go and have a look at some of the moves we've seen today. In particular, look at this Bund move that we've just seen, the final breakout towards the downside, which has been toying with all day and now is finally putting in.